Good morning, ladies and gentlemen. My name is Michalis. I'm one of the market analysts here at HF Markets, and I'd like to welcome everybody to another live trading session. Today, we're going to be looking at the very quick and sudden change in volatility, particularly in safe haven assets. Now, there's definitely been a change in the risk appetite of the market globally. Now, this potentially could be due to the Federal Reserve looking at a lower possibility now of cutting interest rates in December. Previously, we were expecting there to be a 25 basis point rate cut. That now is in doubt. Also, in addition to this, we have to take into consideration that the current President Biden has given permission to Ukraine to use American-based and produce weapons to strike Russia for the very first time. Now that significantly escalates geopolitical tensions, which is of course decreasing the risk appetite of the market, generally speaking. And this is definitely something we can see and we need to take into consideration as traders. So yesterday, we looked, as part of our market analysis blog in the morning, we looked at the US dollar, particularly against the euro and the British pound. We said that the US dollar has been increasing in value for 7 consecutive days, particularly against the British pound. That has never happened in 2024 so far. So we said there was a good possibility because of that, also because of the fact that it reached a significant support level that it could potentially retrace. It did retrace, ladies and gentlemen. If we look at here, we can see the euro against the US dollar. We saw that it retraced. We did say that it could retrace back up to the trend line or potentially back up to the previous swing high. We achieved that. But like I said, today there is a change in the risk appetite. How do we know that? For example, if we look at the VIX index, which is known to be used as an indication of risk appetite, the VIX index, ladies and gentlemen, is almost 5% higher this morning. That is significantly higher, and that indicates that there's a drop in the risk appetite of the market. Now, if we look at global indices, for example, the Nasdaq, the S&P 500, Asian indices, as well as European indices as well, all of them have significantly and very suddenly dipped. If we look at safe haven currencies and assets, such as gold, the yen, the Swiss franc, and the US dollar, they have all increased in value. So we can very clearly here see that there's a change in the risk appetite of the market. And this is why we saw this sudden, very quick change in the price movement. And if we're looking at this price movement in the longer term, ladies and gentlemen, you can see we are still abiding by the lower highs. So we can see here, even after that retracement yesterday, we're still seeing the main swing highs being lower, and we're still seeing lower lows as well. But now what we need to take into consideration is if we're going to see the price continue to decline. And that's what we're going to look at this morning, ladies and gentlemen. Now we can see we're trading below the 75-bar exponential moving average. We definitely can see we're trading below the price sentiment line as well. So the green here is a 75-bar exponential moving average. Here we can see a 100-bar simple moving average. We can see very clearly that the price is trading below both. If we're looking at the RSI, the price has also dropped below the 50 mark. So we're currently at 42. So these indications are indicating that in the short to medium term, that sellers are controlling the market and the US dollar is increasing in value, that there's strong sentiment towards the US dollar. We also can look at the monetary policy and the fact that the monetary policy is supporting a stronger US dollar, as well as President Trump also supporting a stronger US dollar. If we look at the Federal Reserve, the market expectations yesterday morning in the Asian session was that there was a 65% chance of a 25 basis point rate cut in December. Currently now, we're barely at 50%. So we can see a more hawkish Federal Reserve, particularly if we look at the higher inflation, higher producer inflation as well. We can see it's becoming more and more hawkish, and that can support the US dollar, of course. We can see no conflicts between the euro and the US dollar at the moment. The worst performing currency at the moment is the euro. The best performing currencies is the Japanese yen, the US dollar, and the Swiss franc. Now, if we're looking at the Japanese yen, we're seeing a very, very strong rise and higher volatility than compared to the US dollar. So if we are trading the euro against JPY, then we just need to be slightly cautious about the price being oversold. Whereas the US dollar has seen less volatility today, and therefore we're not trading below the 25 level on our oscillator. So there's a lower risk of the exchange being oversold. Now, we saw that the price has retraced. Of course, there is risks of trading downwards. If we're looking at a bullish candlestick, we always say that. But nonetheless, we can definitely see here that we are looking at downward price movement. We're definitely seeing lower lows. We're seeing lower highs as well. If we're looking at the RSI is barely at the neutral level. But if we get some downward momentum regained, that's dropping below 50 again. The MACD is significantly below the signal line and significantly below neutral. So that's indicating downward price movement. We're below the 200 bars simple moving average on the 5-minute time frame. And the latest crossover is a downward crossover. The only thing that we want to see, ladies and gentlemen, is that momentum is regained downwards. So there's two things that we can take into consideration. Number one, we can look at the breakout. The breakout is basically at the swing low. So if the price drops below this level, we can take into consideration speculating potentially a downward price movement. Alternatively, what we can do is we can draw a Fibonacci retracement level. So if we draw Fibonacci from the low all the way to the high, it will point to us here either 61 or 65%, the 65% level. So that's basically saying if 65% of the momentum is regained, then we can take into consideration again that potentially the EURUSD will decline in the short term. So here we've got two potential areas that we can take into consideration. The difference between the two isn't much. We're looking at a 0.08% difference, but of course for short-term traders, for scalpers, for session traders, a lot of the time that's very close to their take profit. So individuals based on this layout can take into consideration two potential entry points, so they can scale in. So for example, opening a smaller trade here and a smaller trade here, or they can trade their full trade at the earlier entry or the later entry. The only thing to be cautious about on the later entry here is that the price doesn't suddenly become oversold. So why are we looking at this trade very quickly, just to recap? The US dollar is one of the best performing currencies of the day. The worst is the euro so far. If we're looking at the performance of the euro against the whole of the market, it's trading 0.44% lower, whereas the US dollar index is trading 0.24% higher. And like I said, it's the best performing currency. The only one which is performing better is the Japanese yen, but that's seen a lot of volatility and on most charts is getting an indication of being overbought. So this is why we have opted for the euro against the USD. We can see definitely a very quick change in the risk appetite of the market that supports the US dollar. We can see that because all safe haven currencies, all safe haven assets such as gold, Swiss franc, Japanese yen, US dollar has increased in value. Also, we can take into consideration that the Federal Reserve currently is less likely to cut interest rates in December, and that can support the US dollar as well. The only thing I would say is because like we saw on the 2-hour time frame, we've seen a lot of downward price movement for the euro against the US dollar. So individuals may want to take into consideration a slightly earlier exit point rather than keeping the trade more longer term. Why? Because like I said, we've seen already a very, very strong decline. So people may want to take into consideration, for example, the resistance point here or the lower resistance point here in terms of potentially where to place their target. Very simply because we don't want to risk reaching that resistance support level, and then the price rebounding and we're missing our target where really our analysis was correct and it moved into a profit. So that's of course something we want to avoid. So that's it, ladies and gentlemen, for today. As always, trade safe, trade responsibly. Enjoy the rest of your day. Good luck. And of course, keep in mind that today and tomorrow we will have a live webinar. And then later on in the week, we will have a live analysis session on our social media and YouTube channel as well. In the meantime, though, goodbye and take care.